All right, welcome back everybody. My name's Austin. There is something fundamentally wrong with the US stock market right now, and as a Bitcoin holder, I refuse to keep quiet. The Fed's actions have obliterated true price discovery in the market, and I'll prove it to you. This is something that big players, big investors in the space, they know. They try and keep quiet, but I will not keep quiet. We will learn, we will grow together. The Federal Reserve continues to destroy true price discovery in this market by executing short squeeze after short squeeze, pushing the market higher. Hey, moral hazard be damned. The Fed's desire to support the market has overruled common sense. We've seen this time after time with well-timed announcements being made to simply fire up bullish enthusiasm and spark a rally. We've seen this. We've talked about this. What happened? The Fed literally prints trillions of new dollars into the economy, devaluing the purchasing power of your dollar. The Fed cuts interest rates to near zero. And then recently, right as we were leveling off, the Fed announces they will be buying corporate bonds, taking the ownership away from private companies and putting that ownership, a piece of it, back into the state. Now, for those of you who watched the video the other day, we talked about what to expect from the stock market in the short term. Because of near record high unemployment levels, restaurants, gyms, local mom and pop businesses, if not closing permanently, tightening their belt with their employees that they keep on the payroll, combined with a potential second wave of pandemic cases that we're starting to see a potential resurgence. All that combined, there's a possibility that we see a retest of 2,800, 2,700, a little correction/crash in the short term. Continuing that conversation, but this time widening our perspective to what may happen in the US stock market because of this, because of the money printing, because of the monetary irresponsibility, plus the announcement that they would start to buy back corporate bonds. They've done this. This is an indication the false economy continues to ramp up. Government stimulus has been a key feature of the global equities rally, even as unemployment has soared and signs that a second wave of the virus has started to emerge. The reason I'm bringing this to you now is not because this is new action. We've seen similar actions from the Fed around the 2008 financial crisis, but now it's happened so much faster, so much quicker, and the level of irresponsibility monetarily we are reaching, if we haven't already surpassed, a point of no return in traditional markets. Let me explain. Until now, meaning in years past, the size and pace of the Fed's balance sheet expansion have put a floor under global equities markets and driven equities higher. Yet this time, Powell is going out of his way to signal that more economic support is on its way. Meaning sort of a consolidation, a leveling off of traditional markets. He's saying that's not good enough. We are pumping it higher, we are buying corporate bonds, and we will print more money, as much money as needed to keep the market going. Right now in Congress, with the US Treasury, it's being talked about an additional $1 trillion infrastructure proposal to further stimulate the economy, which in the short term sounds pretty good. But in the long term, we are slowly eroding the free market part of our free market economy as governments choose what infrastructure is allowed to be built as opposed to the private companies, the people. In many ways, government entities investing in or buying stocks are transferring part of the industry or commerce from the private sector to state ownership or control. While initially the state may not choose to exercise control over various decisions a company makes, the entity that owns the stock can control perceived valuations by being the market maker that sets prices. True price discovery and properly pricing assets are the bedrock of free markets. And if Nixon taking us off the gold standard in the 70s was step one for big brother government taking a little bit more control, maybe you could say the bailouts of the 2008 financial crisis, instead of just letting the economy reset, maybe bailing out certain government-chosen corporations was step two. The bailouts we are seeing today are happening so much faster. Cutting interest rates are happening so much faster today than 10, 11, 12 years ago. There's less and less incentive for corporations as well as states in the US to act responsible with their money if they know big brother government probably going to help out. The Fed has made a major shift from what it was originally intended to do. The Federal Reserve was intended to act as the lender of last resort. But, as Nomi Prinz says, As if the Fed hasn't done enough to destroy honest markets, now it plans to start buying individual corporate bonds. It's just another step closer to the Fed deciding the winners and the losers in the market. By the way, this is not just in the US, this is global, and other countries are way farther down the line. This is a chart of the percent of Japanese ETFs held by the Bank of Japan. Before 2011, the central bank held 0%, and now as of the end of 2019, the bank holds up to 70%. A temporary measure, which yes, took control away from the private citizens, put it into the bank. A temporary measure just sort of continued, now 70%. And the result of this, and probably the biggest takeaway in today's video, this has forced even the most bearish of us to finally concede that for whatever reason you want to claim, the Fed, under the leadership of Chairman Jay Powell, has crossed the Rubicon and the point of no return. By the way, this is the type of information that most other channels won't tell you. The government, big corporations want you to remain in the dark. So hit the like button. I want to try and get this out to as many people as possible so they know this information can truly change your perspective on the markets. Now, if you're an Ethereum holder, I do have big news. So you're going to want to hear that information. But first, Chairman Jay Powell has crossed the Rubicon and point of no return. What do we mean historically when we say the Fed has done that? Well, crossing the Rubicon means the point of no return. This high-level idiom comes from an event in ancient Roman history. In 49 BC, Julius Caesar's army crossed the Rubicon River. This was forbidden. It was an event from which he knew that there was no way back. When Julius Caesar crossed the Rubicon, he started a 5-year Roman civil war, and at the war's end, Julius Caesar was declared dictator for life. Putting the Fed's recent action into context and what it means for investors, the miserable policies adopted by the Fed, which has allowed other central banks to do the same, has created a new environment redefining risk and value. This highlights the fact that there is nothing normal about what is happening. This is far from normal. What this has done is this is slowly eroding the free market, where it's creating a bubble in the bonds and equities, US markets. We are seeing a level of monetary irresponsibility that truly, we have nothing to compare this to. We haven't seen this before. Now, the crazy thing is that up until 2009, which was the first time digital scarcity was created with Bitcoin, Bitcoin is a non-sovereign, hard-capped, global, immutable, decentralized, digital store of value. Nobody controls it. Nobody owns it. With Bitcoin, that was the first time that we could truly opt out. Now, I found this. You know I'm always scouring the webs to find little nuggets of knowledge to bring to you, and this is just sort of a 30-second slice of life musing from the swanbitcoin.com podcast live stream, 30 seconds, from Bitcoin artist Brecky von Bitcoin, but it really sort of puts Bitcoin in the financial world that we live in into perspective.
I was just waiting for you to jump in, Brett.
Yeah, I mean, to kind of like add to that, basically something that I think is also an important aspect of it is the opt-in nature of it. Like, one of my biggest aha moments was when I was just writing things out and I was realizing it's like I never chose to use the dollar. You know, people around the world, they didn't choose to use their national currencies. They didn't choose central banks. They didn't choose any of the quantitative easing. You know, Bitcoin is a choice. You know, I choose to use Bitcoin every single day. I choose to hold it every single day. You know, whether you realize it or not, you're making a choice to either hold it or not to hold it. You know, if you've heard of Bitcoin, you're making a choice whether you realize it or not. And choice is power, and the ability to make a choice is powerful. And that's part of why I think Bitcoin is so incredible, because it gives you that power. So to disenfranchised communities, take the power where you can, you know?
I hear that, man. I hear that.
Like it, support it, share this with as many people as you can. Let's get to the most recent cryptocurrency news. Reddit has invited developers to submit Ethereum scaling proposals for its token project. As you may remember, Reddit is building tokens, ERC20 tokens, on Ethereum. Last month, Reddit announced that it is beta testing 2 ERC20 tokens, Moons for our cryptocurrency and Bricks for our Fortnite BR. The project appears to be an immediate hit and has already attracted over 17,500 users, who made a total of over 20,000 transfers over the last month. And now the website Reddit, very popular, is asking the community, how can we scale Ethereum? Because if we get so many users on this, it's going to clog up the Ethereum network. The company announced today that it has partnered with the Ethereum Foundation, and it is asking developers to submit scaling solutions that will support its new initiative to distribute ERC20 tokens to Reddit users as an incentive for quality content as part of its community points. In a direct quote, "Our goal is to find a solution that will support hundreds of thousands of community points users on mainnet today that can eventually scale to all of Reddit, its 430 million monthly users." And Reddit is now taking it on themselves to help Ethereum scale. Hey, prove me wrong. Alexis Ohanian, the co-founder of Reddit, is to Ethereum what Jack Dorsey is to Bitcoin. I tweeted out this little joke on my personal Twitter. If you guys haven't followed the personal one, check it out. There's a link down below. All right, that's the video. My name's Austin. See you tomorrow.